All right, time to rock and roll, and the crowd goes wild. You may not be able to hear them, but I certainly can. Welcome to the show. Today on the show, we got the great Scott Melker joining us here just a little bit. He is the Wolf of All Streets, the Daily Wolf over on Yahoo Finance. We're talking all things crypto, the Bitcoin conference, and his sit-down with CZ of Binance. Fascinating conversation. We got that for you coming up shortly. Then my good friend Javier, David, we're old buddies from CBS News. He'll be stopping by to talk about the AI spending explosion. These are enormous sums of money and enormous piles of debt as well for the hyperscalers. We'll also do a check-in on the consumer. And then later on in the show, the big tech charts you cannot miss this week with the one and only Jay Woods. You can see how a technician, and that's what Jay is, he's a CMT. You can see how he sees them. You can see in the charts what he sees. I think that made sense. All of this over the next hour, live overlooking the iconic trading floor of the New York Stock Exchange, and all of this to make you at home a more informed investor, or at least on this Thursday morning, a more informed Twitter scroller. None of this is investment advice. Do your own research. Please don't sue me. Let's bring in our first guest. This man is a 41-year veteran of the iconic trading floor of the New York Stock Exchange. He is truly one of one. Please welcome back to the J.D. Durkin Show, the Einstein of Wall Street, the great Peter Tuchman here in studio.
Absolutely. Yes.
My man, good morning to you.
Good morning. Thrilled to be here.
So earlier this week, Tom Lee of Fundstrat, I'm sure you know Tom, or you know
Yes, right.
Fund.
I
He said,
know
listen,
Tom well.
7,700 in the S&P 500.
Yep.
That's on the table. That's another upside potential of 7.5%, 8%.
Right.
Your thoughts on some big, bold, bullish projections?
But did he not say, though, that after we hit that level that we were looking for some kind of a retracement? Or was it a straight? That was he said, right?
With a lot of volatility in between.
Okay. So Tom's amazing. And, you know, he is all respect to him. And look, I'm not a predictor of what the market's going to do. But you know what? To be perfectly honest, I agree with him. You know, I'm disclaimer. I'm not a financial advisor by any means. But my gut is that let's just go back for a moment to where we are today, right? We could go back a year if you want, February, March, April of last year of 2025, right? And this market, you know, February, March, and April, from February 19th down till Independence Day, this market sold off 20.8%. Without our permission. It was just sort of it was a bit torturous. It was basically based on Mr. Trump's the manner in which Mr. Trump disseminated the information around tariffs, right? And you know, it started on February 19th with him throwing out the gauntlet that Mexico and Canada were going to get a 25% knock on tariffs, and that was the beginning of the next 11 weeks of basically throwing out this huge swath of, you know, aggressive tariffing.
I think that works.
Tariffing, okay.
Yeah,
anyway,
that's the verb form.
And so over those 11 weeks, you know, it was the market can deal with anything except uncertainty, right? And sort of misunderstanding of what's going on, and news that doesn't come at them in a way that they can assimilate and understand the information. And so, you know, my gut is that we ended up selling off 20.8%. It was painful while we were all in it. You and I spoke millions of times through that. I was on CNN with Dan Ives every day from February until probably late October. And we talked about it while we were in it. It looked like we were going to be, it was an economic Armageddon. We really felt that this was going to interrupt the supply chain. This was going to be deeply, deeply traumatic and painful for investors, institutional investors, as well as the retail audience. Now, what ended up happening was when it was all said and done, and Mr. Trump said, hold on a minute, you know, we were around Independence Day, nothing to see here. And he pulled the switch on all of that and said, time to buy the market. We were back to even in 4 weeks. And we spent the rest of the year playing catch up, right? And so that was what fueled that sell-off and fueled the rally of February, March, and April of 2025. Same thing happened in a way here, is that obviously this time it was a war, and the war caught people by surprise in a lot of ways. You know, obviously when you have a war, which markets don't always engage, but when you have a war that's got a commodity involved that is so significant in its impact on global economy as well as domestic economy, you know, you've got oil going from $65 a barrel to $119.20, which was the high up until yesterday, which was $119.75. I believe. Yeah. You know, at a higher oil for a prolonged period of time affects absolutely everything.
So why do you think the stock market is at all-time highs despite the war, despite the geopolitical uncertainty and all of the noise out there, yet here we are.
I know. Well, it's kind of amazing. I would have thought if you came to me 3-4 weeks ago that I thought there was more pain to be had. And suddenly last Friday, we were sitting there at record highs once again. And it just kind of quietly inched its way back from like a 9, 10, 11 point erosion to basically we're at S&P 7,100 again. And so, look, the enthusiasm around the market, I think what ended up happening was people said, I'm not going to get caught like I did last year. I'm going to start buying, put together a shopping list. I'm going to start buying the market. I have no edge on the war, right? We're not getting information that's giving us a peek into what the war story is all about. So you know what? At the end of the day, I'm just going to start buying the market as if nothing is happening. And so people started to do that, whether it was retail, whether it was institutional or what, people just started buying the market. And I think that, right now we are trading at 71 and change on the S&P. We're almost at 50,000 on the Dow, right? The market is incredibly resilient and strong. People are back in the market and it's not irrational. It's with enthusiasm, right? And so what I think you're going to have is the minute that this confrontation or conflict is actually over, right? I say that the market just sort of catapults into the fourth dimension.
What do you see every day on this trading floor that the average retail investor at home may miss?
Well, I get to see the order flow that comes in for the NYSE opening and closing bell, right? So I get to see really who's putting money to work in this market. And so we are back in a mode. We can go back all the way to 2020, right? We've got 50 million plus new investors in the market. You've got amazing new renaissance of traders in the market globally. You've got a New York Stock Exchange that is trading at record highs. I get to see. I kind of read the room. I'm not a card player, but I get to read the room as if I was sitting in Vegas. At a high level poker game, really, because I get to sort of hear what people are doing. I get to see the order flow that comes in, right? And what you end up having is there's people do not want to get caught underinvested. The market feels resilient. Right now, look, I had a chat with Dan Ives the other day, and basically we're looking at the tech sector, we're looking at the data centers, we're looking at the energy sector, we're looking at all of these things that are part and parcel, that are all the components that are going to make up this, the new foundation of the next rally. The amount of money that's being put in, as far as Dan goes, the demand is bigger than ever, right? I mean, it's unbelievable. Even though we've had a bunch of bumps in the road over the last 3-4 months and a year, at the end of the day, it's the demand for AI has never been bigger. The amount of money that's being allocated for AI data centers and energy and all that has never been bigger. And so you have this irrational enthusiasm around the market, and literally everybody's buying.
What do you remember about your first day here on the trading floor at the New York Stock Exchange?
So it was March 28th, 1985. I had just come back from, I'd been living in Africa, doing accounting for a Norwegian oil company. Wow. I'd been there for about a year and change. And I got a summer job as a teletypist for Cowan and Company underneath the podium, which is where it was an amazing booth because, as we do have the floor now, you have, for those of you who don't know, the room is set up that on the outskirts of the room are brokerage firms, are booths connected to trading desks upstairs, whether, it's Goldman Sachs, Morgan Stanley, Wells Fargo, whatever it may be, right? And then you've got market makers who are the posts that we have in the room. And so the booth, the booth that I worked in was Cowan and Company, and that made up of an option clerk, 2 retail clerks, an institutional clerk, a teletypist who was me, and wow. Then you had a small firm called Abel Nozier, a young woman just inputting order flow into a machine. Then you had Samala. Samala was the firm that was run by Ivan Boesky, who was the first this big corporate raider who believed that who at least claimed that he was having premonitions about takeovers, right? If you watch the original Wall Street movie with Michael Douglas and Charlie Sheen, right? That's the story of Ivan Boesky. Ivan Boesky was claiming that he was hearing voices that was telling him to buy stocks. It turned out that he had a guy up at Goldman Sachs named Dennis Levine who was giving him inside information.
That was the voice in his head, yeah.
Exactly. He ended up being indicted for insider trading, fined $183 million. The firm ended up closing down, but there were people like Stevie Capo. You probably remember him. He worked under the booth there. It was an amazing group of people. And then we had Dean Witter, right? So in that booth was some of the most powerful things. And I walked in there, and I was wearing a suit because that's what you had to do. And the room had 7,000 people in it, and the energy was palpable in the room. Now, it's curious because that was the day that Ronald Reagan rang the opening bell. And there's a photograph of that as you walk upstairs. I didn't know that was my first, that Ronald Reagan rang the bell on the first day I worked here until I saw that photo. I was so overwhelmed by all the excitement. I was 25 years old, right? So, or even 24. And so I was like taken aback by it, but the level of excitement, the level of adrenaline to be in the room where it happened, right? And I just remembered, oh my God, I've arrived. This is where I want to be. I am never leaving this place. I felt like I want to sleep here, right? Because I didn't want to miss a moment of what was going on here. I was just like starstruck by it, the energy. Why I started to understand really quickly, what the layout, the landscape, the ecosystem looked like, right? You had brokers, house brokers, you had market makers, you had $2 brokers. They were the commission brokers who were on beepers, right? We had like 3 or 4 $2 brokers on staff there. And I remember after about 2 or 3 hours, it was lunchtime. Now, nobody obviously gets lunch down here, but my father had a patient named Horace Silverstone. He was the market maker in AT&T. He had been my father's patient. My father was a well-known doctor in New York. He had been, he decided on my first day of work, he was going to take me out for a lunch to kind of welcome me to Wall Street. And he took me to Francis Tavern, which is where, it's an infamous place here. It's where George Washington signed one of the big documents. And so I kind of walked with him down the street, and I felt like I was being welcomed into this secret society, right? And every day since then, every day from that moment on, I felt like I had a little bit of a sliver into Wall Street. I didn't know at the time that it would be my whole life, that it would be something I would end up loving as much as I did. But it was amazing, and I'm just grateful and still in awe of this place. Of coming in here every day for 41 years, and just the privilege.
And I am grateful and in awe of you. Your more than 4 decades of work down here, your friendship, the media apparatus in this institution would not be what it is without you.
I appreciate that.
Because you've been such a dear friend, and you're always so accommodating and willing to come join us for all of our content and our shoots. I'm incredibly grateful.
Yes,
you joined me up in the studio. I believe we have our next guest. Let me intro the guest, and I'll grab your mic and I'll send you on your way. That's how we do it on the JD Show. We just let it rip live.
Boom. It's smooth.
I believe we got Scott Melker join us now. Scott Melker is the host of The Wolf of All Streets and also the Daily Wolf, a brand new show over on Yahoo Finance. Do we have Scott? Scott, can you hear me? My man, welcome to the show. It is great to have you here. There he is in the iconic shot. We've been looking forward to this. Scott, first and foremost, because I know your stream has been covering this, what has been top of mind this week at Bitcoin 2026 conference in Las Vegas?
I think that people have been trying to parse whether the numbers of how many attendees are there are real or not. Because last year, obviously, they claimed 40,000 attendees. I think there's been a big shift in what the audience looks like at the Bitcoin conference over the years. And this year, a lot of reports that it's been much lighter. I think that probably makes sense considering market conditions always align with what you see on the ground at conferences. But I think perhaps the bigger story is who's speaking, right? I mean, you went to the Bitcoin conference in 2021, 2022. It was all of the Bitcoiners, the Michael Saylors of the world, the Jack Mallers. This time you look at the headliners, and it's like a veritable who's who of Washington, D.C. Yeah, Kash Patel, the FBI director. That's not the most Bitcoin thing I can think of. Certainly, Eric Trump and Paul Atkins and Michael Selig. So it really shows you where the puck has moved, at least for the Bitcoin conference, for this community, that we're looking so heavily to the administration and to institutions to kind of guide the industry. It's a really strange time.
Scott, I've always wondered, are things like that a little bit less fun to go to when Bitcoin is 40% off of its highs, or are the vibes always high?
Definitely a lot less fun to go to, not even a question, to be honest. What I described also contributes to that. You know, when you went to the Bitcoin conference in 2021, 2022 in Miami, there was literally a music festival going on in the parking lot. You had like Steve Aoki throwing cake in people's faces and everybody dressed in costumes like it was Mardi Gras. And now it's guys in suits. You know, and there's always this sentiment, this idea, obviously, that the price of Bitcoin drops during the Bitcoin conference every single year, because you got to assume everybody who would be buying it is drunk. But once again, you know, you have a little pullback. But yeah, it's a lot more fun when the market is up. There was a year Consensus, I think it was in 2022 in Austin. Nothing against Consensus, they're great. But I remember walking around the convention floor. It was maybe a third of the people. We just had FTX, Celsius, you know, all of those collapses. And literally half of the booths were either bankruptcy attorneys or accountants. And you know that that's not really a good sign when you see that instead of, you know, layer ones and Bitcoin mining companies.
So I'm always fascinated with the general correlation conversation. And I wonder, because you track it very closely, is Bitcoin behaving like a high beta QQQ or some other high beta NASDAQ asset? Or has that long running correlation finally broken down, Scott?
So listen, I'm pretty passionate about the non-correlation of Bitcoin if you zoom out and look at it over a long term. So people love to say, oh, the stock market just opened, Bitcoin went down with the Qs, right? But that's a 20-minute phenomenon 5 days a week for an asset that trades 24/7, 365. And you can't really explain to me why Bitcoin does what it does on a weekend if it's correlated to other assets where the markets are closed, right? And I mean, if you zoom out to a 10-year chart of correlation of Bitcoin to other assets, it's beautifully uncorrelated. There are random walks in the park. Obviously, if there's a black swan event in the economy, generally all assets correlate and go to one. We know that, right? I mean, listen, gold has been trading like a risk asset. So what even is a risk asset or a risk off asset at this point? For me, it's hard to determine, but it certainly doesn't trade like gold. It certainly doesn't trade like stocks most of the time. So in my mind, it's sort of the holy grail of a portfolio, because if you can find something and put 5% of your portfolio in it that has idiosyncratic risk and even has a chance of trading in a different way than everything else in your portfolio, that's even good when your thing goes down and everything is going up, right? Because it increases the Sharpe ratio and gives you that flexibility. So I don't really believe that it's correlated, except for in certain circumstances.
Let me ask you about the central bank. Jerome Powell out, Kevin Warsh in. How much does Fed leadership actually matter for Bitcoin?
Well, Jerome Powell's out-ish. Right?
Out-ish, correct. He will still vote on the FOMC for the time being.
But lurking awkwardly in the corner and watching. But yeah, I think it shouldn't matter much because I think that largely we're in a fiscally driven environment, and the Fed itself is actually effectively neutered, because I don't think that cutting or raising rates matters much right now when you have a deficit approaching $40 trillion, and really the levers that need to be pulled are probably at the Treasury. That said, I mean, Kevin Warsh, Daddy Warsh bucks, as I like to call him, guy's worth billions of dollars. He's married to Estee Lauder, the granddaughter of Estee Lauder, worth 190 himself, and has over 30 investments in crypto. And I looked at his portfolio, and he's invested in stuff I haven't even heard of, right? And I do this stuff all the time. I mean, this guy is a crypto degen of crypto degens. He gets it. So listen, there's the one cynical take that says, like, this guy's going to trade to benefit his, or he's going to make policy to benefit his portfolio. That's absurd. He's divesting everything in advance. But I am of the strong belief, call me crazy, that the person who creates policy on something should actually understand it, right? And so having octogenarians and nanogenarians, or whatever we call them, deciding what policy will be around financial markets in general, but certainly around new technology, crypto, AI, things like this, it's absurd. They have no clue. They have some staff member who's probably 70, young, who's advising them on what to do. And so, I think it's a net positive in general to have somebody younger who's touched the industry in power. And we have that at the SEC. We have that at the CFTC. Now we're going to have that at the Fed. It's across the board.
Scott, you mentioned a lot more suits that you see at events like the Bitcoin conference. Who is more responsible for driving crypto price action today? Is it retail, or is it big banks and asset managers?
It ain't retail. You could look at a chart, I believe it was from River, that showed Q1 of 2026, and I believe 69,000 Bitcoin were added by institutions, and 61,000 Bitcoin were subtracted from retail. So I think it's pretty clear that retail has not participated. So once again, you can take a glass half empty or full view of that, right? In the depths of bear markets, you generally don't see retail participation. If you get a slight uptick in that, imagine how good it can be. And I've kind of always joked that higher prices are the best marketing for Bitcoin. If we're all of a sudden at 95 or 100 in a couple months, people will be interested again and retail will come back. And that smart money, the institutions will already have packed their bags, right? So if you see quote unquote weak hands handing off their Bitcoin to strong hands, that's usually a pretty solid sign that you're on the wrong side if you're selling here.
Scott, what do you think far too many investors, especially in the lane of traditional finance, still get wrong about crypto?
Everything. I think that we still have the anti-crypto army screaming about how Bitcoin mining is boiling the oceans and it's only for North Korea and hackers or drug dealers and things like that. And I think it's taken a long time to shake that stigma. I also think there's a unfortunate conflation of Bitcoin and everything else. You know, in my mind, there's Bitcoin and then there's the crypto market, and they might as well be completely separate markets. And that's not an indictment of the crypto market. I just don't think that they trade the same, and I don't think that they're based on the same thing if you're looking at valuation. So I think there's a lot of reasons. Listen, we have a long storied history in the crypto industry of turning around, kicking the ball into our own goal, shooting ourselves in the foot, whatever analogy you want. Like, we have own goals like no other industry has own goals. FTX, Celsius, all of that. Now, hacks across DeFi. Certainly, the Trumps extracting maximum value from retail via crypto is not helping. So those are problematic. But at the end of the day, you can just buy Bitcoin and chill, and life will be good.
Buy Bitcoin and chill, and life will be good. My man, I got to ask you about your conversation with ZZ of Binance. This was absolutely fascinating. Please correct me if I'm wrong. He is out now with a new book. His book is called Freedom of Money. First of all, I have a lot of questions here. What was the biggest surprise from your sit down with CZ?
I've known him for quite a while, but I was not aware of how humble his humble beginnings were. He sort of passively would say, I came from humble beginnings, and gloss over it. I mean, you're talking about a guy who, dirt floors and no running water and electricity poor in China, who became arguably one of the wealthiest people on the planet, right? Nobody could really peg his wealth, but maybe $100 billion. Sort of at the peak. And I think it's just a fascinating story of somebody rising from sort of those depths to the level of success that he had. I also always find sort of the beginnings of crypto and building in that phase to be a fascinating story from him and other founders, because there really were no rules. And you had to be deeply concerned with what you could possibly build that wouldn't get you in trouble in the future when the rules were written. And we're still writing those rules, right? And so, I mean, he went to jail for something that nobody in the great financial crisis went to jail for, violations of the Bank Secrecy Act, things that were always a slap on the wrist. He admitted to me he didn't think he would go to jail. So it seems like he was treated, wildly unfairly by a very contentious administration. Just a fascinating story and a fascinating guy. And I think it's good to see anybody come through that, still maintain their wealth and their power and really come out humble after the experience. Just a really riveting conversation.
And he said when he was in prison, he did not play dominoes with the other inmates. How did he spend his time instead? Was it mostly working on this book?
Dude, I don't know if you saw, but he did a lot of push-ups. He may not have been playing dominoes, but he came out as jacked CZ. It was like almost a meme. But, I think he did talk about the fact that he could only write the book 15 minutes a day, which he did write in jail on a shared broken laptop in the prison. Like, that was also a pretty incredible story. And, he didn't have ChatGPT in prison, so we know he actually wrote it, which is impressive. Everybody else just dials it in now with AI, I think. I think he's spent his time reading, contemplating. He was only there 6 months, so that, it's not like he spent 60 years in prison and came out to a zombie apocalypse. So I think that's really good,
yeah, it's an outstanding interview, and I encourage people to go check it out. I got a few minutes with you left. You've built, and you are one of the most trusted voices in crypto across the internet. I wonder, what do you read? What do you research to become a smarter investor or better at your job?
Honestly, at this point, it's largely news flow. I think I've read every financial book in history over the years, and every once in a while I'll revisit one. But at this point, it's just really just the research from my team that I wake up to in the morning. You know, I write a newsletter every day at 4:30, 5 o'clock in the morning that really keeps me accountable for the rest of the day. I've been doing that for years. I'm at issue 1400 of a daily newsletter that I write every single morning and comes out by 7 a.m. So I feel like by the time I've done the research and written that, I'm pretty much on top of what I need to know for the day. I obviously take that into my 9 a.m. YouTube show, my 10:15 a.m. Twitter Spaces, and then my 12 p.m. show on Yahoo Finance, as you mentioned. So I think when you're this deeply in the industry and deeply in the news cycle, it's hard to miss much.
So let's talk about that new show with Yahoo Finance, good friends of ours here on the JD Durkin show as well. What should people know about the Daily Wolf?
The Daily Wolf is every single day at 12. It's not like the format of my other shows that are interview driven. It's just me ranting and raving completely off the cuff with no teleprompter and notes for 15 minutes about the top 3 to 5 stories of the day. Sometimes I accidentally say bad words. I'm not sure if I'm allowed to do that or not. But it's really pretty much me unhinged and my honest takes on everything that's happening. And that comes with a lot of good and a lot of bad. I think that, you know, a lot of maybe cheerleaders of the industry who are deeply in it wouldn't necessarily share. So I think if you're looking to just be updated on what's happening on any given day, it's a really good, palatable 15-minute, you know, download on what actually matters. I mean, the idea is just kind of separate signal from noise, and which is very, very difficult in today's world. And I do my best to achieve that.
The Daily Wolf, the latest in crypto every day, 12 p.m. Eastern on Yahoo Finance. Before we let you go, Scott, where can people go if they want to find more of your stuff?
You can find me there, but also on X at Scott Melker, SCOTTMELKER. Pretty much everything is branched off from there. As I said, we're doing a lot. So if you want your crypto updates, we got you covered.
The Daily Wolf, the Wolf of all streets. He's a good friend of ours at Taking Stock, the Daily Closing Bell Show. And I'm really grateful you made time for us here this morning. Special thanks to Scott Melker, you and your team. Scott, thanks a lot. Nice to see you today.
Thanks so much, man. It's an honor.
All right, we got my man Javier David join us in just a bit. But first, let's take a look at this interview. This was just yesterday on Taking Stock. This is also one of our favorite guests. We're always very lucky to talk with her. Take a look at my interview with Caroline Pham of MoonPay. This is from yesterday's Closing Bell. Our favorite all-time Taking Stock guest is generous enough to return once again. Caroline Pham, Chief Legal Officer and Chief Administrative Officer at MoonPay. Thanks for joining us once again. It's great to see you.
Thank you so much. I love coming on the show.
I feel like every day I have to ask an expert the latest on the Clarity Act and what you're following out of Washington. Are we finally on the verge of mainstream bank participation in the space? And you're a longtime DC veteran. What are you looking for out of this bill?
So we are definitely having banks participating in this space. I mean, I've always said that 2026 is the year of institutional adoption. Look, banks have been working on blockchain technology since 2015, 16, 17, 18. And so right now, with the regulatory clarity that's been in place at the agency level, that's created a great foundation for all the announcements since January, which is key to why we're launching MoonPay Institutional. And then, of course, any additional regulatory clarity is going to be very welcome.
What other advantages out of the Clarity Act eventually passing the Senate, the House, and onto the desk of the president are you most looking forward to?
So I think what everybody's just really keen to have is a coming together of the minds, and just let's all agree on what the rules of the road should be, and then let's just go build.
Today was Jerome Powell's final press conference, we believe, as chairman of the central bank. We get Kevin Warsh incoming soon. How much does Fed leadership actually change the trajectory for the broader cryptocurrency space?
So I think the Fed leadership is going to be important for digital assets because a huge use case and value add for blockchain technology is what role it plays in collateral management for our markets. So of course, previously I had worked on the tokenized collateral guidance when I was at the CFTC, and just having the information there about how we should treat this innovation, which is going to allow for real-time settlement, that's going to make a big difference. Capital rules, of course, are very important for financial institutions, so the Fed definitely has a big role to play.
You and I were talking a few minutes ago there about regulations, and I wonder how you see the different approaches in terms of stablecoin regulation and legislation in the U.S., versus the EU? If people don't follow the differences too closely, what should they know?
So I think one of the key differences about being cognizant of for stablecoins is, look, the EU came out first with MiCA. They had a 2-year implementation period for stablecoins. Of course, the US came out with Genius Act, and the rulemaking is going to be in place, hopefully final by the end of this year. I think what we're going to see is a shift towards the U.S. approach. So it's very possible that MiCA is going to have to be amended or updated to then conform with the Genius Act approach.
Oh, that's fascinating. We'll look out for those developments and more. I want to ask you all about MoonPay's new fiat to stablecoin virtual offerings. Are stablecoins becoming more and more a bit of a checking account? How are you approaching that conversation?
Stablecoins are not a checking account, right? And I think this was really clear when you look at sort of the OCC proposed rule, where if you have something that is a lookalike checking account, a lookalike savings account, a lookalike money market fund, that's not going to be okay. But something that's a merchant rewards program, I mean, we're used to that in financial services. Think about your credit card rewards program, right? Think about points that you can get, you can redeem, or cash back. All of these are really reasonable ways to think about the benefits that you could have in using stablecoins. So I think we're really just seeing a modernization of the existing financial products that we love and use every day. You know, there's another example that I was told, which I think makes so much sense. Stablecoins are almost like our modern day traveler's checks. Some of your viewers may not know about traveler's checks, but back in the day, you could travel anywhere in the world and you'd have traveler's checks, and it was denominated in US dollars, and that was good as cash, right? And so if you think about it, stablecoins are the same thing. It's a bearer instrument. That's also why it makes it so good for markets and for doing collateral management.
I am old enough to remember traveler's checks. Before I let you go, the acquisition of Israeli security firm Sodot, I hope I'm pronouncing that correctly. What does the deal say about MoonPay's increasing pivot to institutions, if that's the right way to frame it?
So I think what's really unique about MoonPay is MoonPay started from the non-custodial space, and it started from DeFi. There are a lot of people who say that DeFi is not safe and not secure, and we are proof that that's just not true. We have 30 million users in 180 countries, and when you think about that and that we do settlement in 120 different fiat currencies, we do KYC, we do transaction monitoring, we do sanction screening, and we do SARS reporting. So by taking our strength there in DeFi, for any TradFi that wants to access DeFi liquidity, but do it safely and securely, especially with all the hacks recently in the space, or people thinking about quantum computing, or people thinking about Anthropic's Mythos that was released, that is why this acquisition of Sodot was so key for us. Ido Sofer and his team have built such a great thing. They have the best-in-class secure key management used by exchanges and trading firms all over the world, eToro, Flow Traders, Flowdesk, BitGo. So we're really excited about what this means to anchor our institutional offering. We really are bringing access to cross-chain collateral mobility as well as DeFi liquidity.
And I was really excited all day and all week knowing that you were generous enough with your time to come back on the show. The great Caroline fam. Big thanks there to the great Caroline fam. She was on Taking Stock yesterday, and now let's bring in my good friend. I have not seen this dude in a long time, but we're old pals from CBS News. He is also a CBS contributor, longtime business journalist. Javier David, good morning, my man. Welcome to the JD Show. It's nice to see you.
Yeah, great to see you. It's been way too long.
Dude, so you left New York. If I'm not mistaken, the last time I saw you, you and I were supposed to go to a Mets game that got rained out, which also happened this last Saturday. I had a group, and so you just chilled with me in Sunnyside, and we made the best of it.
I got those amazing cookies. There was that cookie shop right across the street from your place, which I
Chip City. Chip Cities are lethal, dude. How have you been, and where have you been?
I have been fine. I am in Dallas. DFW is a very exciting place to live. It's a very exciting place to work. It is the center of the AI data center story that we talk about virtually every minute of every day. Lots of data centers going up here. People don't talk about it enough for my taste, but it is also becoming a sort of global financial center. Wall Street, it's a really big story. It's an undercover story. A lot of finance companies, names that you're well familiar with, are turning up in the neighborhood. Goldman and JP Morgan all have really big footprints here. They're continuing to grow those footprints. Scotiabank, massive players. A new stock exchange is going up. It's just an exciting time.
Yeah, that's right. Yeah, I also got NYSE Texas, Jerry Jones, the Dallas Cowboys, heavily involved down there. It's a fascinating market that you're in. We miss you up here, though, man. Please come back and come hang out in Queens anytime. So speaking of big tech and speaking of all the big regional investments there, Let me start. We'll talk your hyperscaler debt issuance chart in just a second. But first, more broadly, we had Microsoft, Amazon, Meta, Alphabet. Of course, when you and I are recording this live, we got Apple after the bell today. Javier, is it still a Mag 7 market, or are we seeing broader participation?
Yes. So I would say profits are strong, and a lot of that is owed to the sort of Mag 7 effect. But they're stronger in certain sectors than others. And while AI, the tide is figuratively lifting all boats, the wave isn't necessarily as broad or as strong as one might think. Someone I follow on X posted this morning a stat showing that Mag 7 companies are expected to grow earnings by over 20% this year, but excluding those, the other 493 companies in the S&P are going to see more modest growth of around 4.1%, which is actually pretty good. But not. But it bears mentioning that certainly it's not as strong as the Mag 7. So one of the indexes that people tend to ignore is kind of the small cap Russell 2000. It briefly entered correction territory last month. It was kind of the first of the major indexes to do that, but it's come back. But it shows just kind of how sensitive small cap companies are to a lot of the macroeconomic forces. They don't have the big balance sheet. They can't hyperscale. They don't have all the money that these big tech companies. So it sort of shows you, it sort of tells a story that there's a segments of the market that just not necessarily as insulated as the big dogs are. So you just have to be sort of careful, and you can't necessarily draw broad conclusions just because a handful of companies.
Javier, I wonder how you would diagnose how the consumer is right now. Is the consumer still holding the market up? Is the consumer starting to crack? What are you seeing from the data and reporting that you've been doing?
I mean, yeah. I mean, the answer to that one is also yes. Remember that old Sesame Street adage, the episodes with the voiceover guy? You might be a little bit too young to remember this, but it's like, today's episode is sponsored by the letter, whatever it is. And today, in similar fashion, this economy is really sponsored by the letter K. It's K-shaped. It's, the growth up at the top, but it's down at the bottom. People are really, really struggling. So there was a really good Yahoo Finance article that I clicked on earlier today. The headline said, TransUnion data showed subprime consumers saw their credit scores tick up, but the super prime consumers, the ones that have really good credit scores, saw their scores jump even more significantly. And meanwhile, you have this cohort in the middle that saw the scores take a hit. So, the credit card data, the revolving data tell you everything you need to know. We have $1 trillion worth of revolving credit. People are taking on more debt, and I've been banging on this drum really since 2022 at least. Revolving credit has become this sort of inflationary release valve for the middle and working class. People are just charging things in the hopes that they can just kind of keep up, and they have been keeping up. But it kind of shows you, look, it's with the surging cost of everything, it's held up, but it's not remotely sustainable, especially when you've got interest rates driving up APRs and by extension all the balances that people carry. So, that old saying as it goes, something will continue until it just can't.
All right. You brought a chart. We're very pro charts here on the JD Show, man, and thank you for this one. This is hyperscaler debt issuance. Now it's a party. We'll pull it up here from the control room. There it is. This is the first part of it. How much of this is being driven, Javier, by the AI arms race? And give us a bit more context for what we're looking at.
Yeah, look, the sheer mind-boggling amount of money that's being spent on hyperscaling AR, it's just staggering. After yesterday's earnings results, the numbers actually got revised up. So we're talking about over $700 billion this year alone. So Barclays put a note recently that they said that total corporate bond investment grade corporate bond issuance this year going to be over $2 trillion, which is going to exceed even post-COVID record levels. So it's just kind of you think about these numbers and you're like, okay, we're talking a lot about OpenAI. We're talking a lot about, Microsoft and all of these big dogs. But the whole thing is, is the reality going to match up to these expectations? My sort of hot take, and I joked about this on LinkedIn a couple of months ago, is that there's so much debt being issued, and it's being issued by some of the biggest names in the business. It's almost like the AI debt is becoming safe haven trade, because meanwhile, all of this is taking place, and something that we also don't talk about a lot is the fact that treasury bonds and government bonds are kind of getting under a lot of pressure. Yields are rising. All of a sudden, you have a government that continues to spend and doesn't really have any plan to sort of corral that amount. All of a sudden, just doesn't look as attractive, and it's not as safe as it used to be. So here you have all of these investment grade bonds, which are presumably rated AAA or AA or what have you, But they're highly rated and they're considered safe, so everyone's flocking to those. So can the market absorb all of this? One, two, does that kind of make AI bonds the next safe haven trade? And that comes with a whole lot of risk because there's a whole lot of assumptions being made about the growth of AI and how these companies are going to make all of this money. And it's not entirely clear at all just how much they're going to be able to recoup all of this. But it's debt, and debt is usually, again, something that you have to pay back. And do you have the means to pay that back? Still no.
So that leads me to the next part about this, which is fascinating. Watching these earnings, these are eye-watering numbers. Like at a certain point, your eyes just glaze over with how much they're spending. At what point, Javier, does rising debt to fund the AI infrastructure start to put additional pressure on margins, or even just change fundamentally the valuation story itself?
Well, interestingly, the yesterday's results revealed a couple of things, or one thing in particular, that a lot of these companies had free cash flow, and it's like evaporated. Google, Microsoft, Amazon in particular, Meta in particular, actually. But it just shows that they're spending money, but they're not necessarily getting it back. And there's no clear plan as to how you're going to be able to monetize all of this debt that you're issuing. Meta's falling today because they kind of like disappointed on certain metrics. But you really are at a place where people are going to start questioning how much you can actually continue to spend without materially getting some of that back in terms of profits. And, that's up in the air.
Yeah, is Meta ever down? 9.5% today. Microsoft down 4.5%. NVIDIA currently down about 3.6%. Alphabet, though, nice little swing for the fences, up more than 7.5%. Javier, while I still have you, yesterday was Fed Day. We love Fed Day. Yes. How do you and how did you sell? I feel like you and I over the years we've been together for Fed Day. Like we'll be up in the CBS News studio. We weren't together this time. Yeah. How do you celebrate Fed Day? What do you do?
Yeah, I just continue to kind of like my attention is spread over a bunch of different things, but then I come back to it like sort of after hours and dinner hour and kind of digest and read all the hot takes and the transcripts and so forth. And yesterday was really interesting for a few reasons. It was Powell's last one as chair. I had expected him to give some sort of lip service to central bank independence. But, his actions or his words yesterday were a lot stronger than I might have otherwise anticipated. He's going to stick around for another couple of months. He explicitly suggested that he was doing that in large part to help kind of blunt this political interference. And there are a couple of things that spring to mind. He's doing it because he knows it'll infuriate the president. And secondly, he actually doesn't mind doing that, mainly because he's really the only one in Washington to date that's been actually successful in fending off pushback from that. So I'm kind of hard to believe that Powell was, in fact, appointed less than a decade ago by the guy he continually fights with. And he's a veteran of all these different wars. But, his legacy is going to be defined by how we can sort of corral this inflation, if at all. And he will actually be very much synonymous with like political pressures that come from the White House and of the president of any party. And he's going to, very much be sticking around, I guess, for at least the next couple of years to try and see what he can do to sort of mitigate some of that.
While I have you left, Javier, where can people go if they want to see more of your stuff?
LinkedIn. I hang out on LinkedIn a lot, but I have a site. And LinkedIn is probably the best way.
Javier David, my man, it's been far too long. Please come back. You're welcome to join the show any Thursday morning. Come back. We'll take you remote for taking stock. Dude, I miss seeing you. Come back to New York anytime. Or we'll have to take the J.D. Durkin show on the road down there to the great state of Texas.
I think you should, because there's a lot going on and you learn a lot.
You're not kidding. Javier David, my man, thank you very much. It's great to see you again. Taking care of yourself. Folks, also yesterday on Taking Stock, I caught up with Ted Rossman. He is the principal analyst at Bankrate. We had a lot to get through, including the latest on big tech, the Fed, and much more. Here now is my chat with Ted. Take a look. Let's bring in our good friend, Ted Rossman. He is now principal analyst at Bankrate, a brand new title, but a name you know and love. Thanks for being here as always.
Good to be here, thank you.
So, Einstein and I were just talking, there's a lot of headlines to go through for the Fed, the commentary, no dot plot for the FOMC today, but the fact that Jerome Powell is essentially saying, I'm not going anywhere, I may not be chairman, But I'm going to have a voting seat here for the FOMC. What'd you follow for Fed Day, Ted?
That was big news. I didn't think he was going to give us too much on his future today, but that will be notable. I think really the biggest takeaway from the Fed is they're in wait-and-see mode, and many believe that will continue throughout the rest of the year. According to Fed Futures, CME FedWatch has about a 90% chance that rates are unchanged by the end of the year. Actually, a slightly greater chance they go up rather than down. That was the main explanation for 3 of the 4 dissents today. Those Fed officials don't necessarily want us to assume that the next move is going to be downward.
Yeah, that's right. You're talking, obviously, Stephen Myron, first of all, he's the first of the 4 dissenters. Voting for a cut, no big surprise. That's the president's pick. Then you got regional Fed presidents Hammack of Cleveland, Kashgari of Minneapolis, Lori Logan of Dallas. They're trying to communicate something a little bit different. What does all of that mean, presumably, for incoming Fed Chairman Kevin Warsh?
Well, he's definitely not going to have a slam dunk to lower rates. I know that's what the president wants, but we have to remember this is a 12-member committee. They take their job seriously. The Fed wants to be independent. I mean, how many times was independence mentioned during the press conference today? What we need to get used to here as consumers and as investors is perhaps higher for longer. That's having effects on the housing market, where the average 30-year fixed mortgage rate is around 6.4%. The average credit card rate is still close to 20%. Really across the financial spectrum, higher for longer could be the mandate here. A lot of that comes back to the war impacts too. I do feel like mortgage rates are about a half a point higher than they would have been if we didn't have the inflation impacts of the war.
Can you tell me a bit more about what you've tracked specifically for the 30-year fixed rate mortgage? That's one of the top questions I get from people who say, great, interest rates are coming down. What does that mean for my mortgage? When can I expect that alleviation of pressure? How do you approach that question?
6% is a psychological tipping point, and we got to around 6% back in February. Some sources actually had it just below 6 for the first time in 3.5 years. Now we're closer to 6.5. That half a point is meaningful. It has slowed the spring home buying season. It will likely slow the market through the summer just because a lot of existing owners have rates in the 3s or 4s, and they're reluctant to put their homes on the market. The first-time buyer is price sensitive. It makes a difference at 5.5 versus 6 versus 6.5. Now, you can still get rates in the mid to upper 5s if you have really good credit, if you shop around aggressively. It's very important to do that.
I want to get your take on a lot of big tech earnings. This, even if it weren't Powell's last day and an FOMC, a Fed day, it's a huge day for tech earnings. Microsoft, Amazon, Meta, Alphabet. We get Apple tomorrow. We're tracking capex spend. We're tracking strength of the consumer despite the economic headwinds. What are you looking for as some of the biggest, most important names that trade anywhere in the world are going to tell us what's under the hood in the next few hours?
Right, clearly these big tech names are going to have a big impact on the overall market. I've been struck so far this season that earnings have been very positive. The banks were very positive, very upbeat about consumer spending. Jerome Powell talked about it today too. The consumer business fixed investment, he noted, was strong. I do feel like whether it's AI or whether it's other things, businesses are spending, consumers are spending too, and that's surprising. These higher gas prices, they've dented the lower 20% or so of the income distribution, but not everybody else. People are still traveling, they're still going out to eat, they're buying things online and at the mall. Don't underestimate the consumer, right?
Yeah, I feel like a lot of people are complaining about where prices are, but consumers are still spending. Before we let you go, any final catalysts you're paying attention to, you think market participants might benefit from paying a bit more attention to?
We do have PCE coming up in a few days. I mean, hard to believe that's going to fall below 3, just given all the impacts of higher oil and gas prices. We could start to see that bleed into other areas of retail and travel. That could ultimately weigh on the consumer, but again, don't underestimate the strength of this consumer spending. The job market's still in pretty good shape, and the market's still near record highs. You wouldn't have thought that a few months ago, right? With oil nearing 120.
Yeah, I think it's the first time I've seen you since we've closed above 7,000 for the S&P 500. So it's nice to have you here. A longtime friend of ours, Ted Rossman, principal analyst at Bankrate. Thanks for being here. Awesome, man. All right, there we go. My special thanks there to Ted Rossman. And now a man without whom this show probably would not happen. A very dear friend of ours here on the show. He is the chief market strategist at Freedom Capital Markets. He is a CNBC contributor. He's also a very good person. Please welcome to the JD Show, the great Jay Woods in studio, the guest in the nest. How lucky am I, dude?
Hey, great to be here. It's a nice setup you have.
I built the studio myself.
Yeah.
Now, you're truly one of the busiest people in the world of financial media these days, dude. I don't know when you sleep. I don't know when you prep and do your charts, but you're everywhere.
I did not sleep last night, if you want full disclosure. I was on CNBC. The car picked me up at 4 a.m. and I didn't get home until like midnight. So a little nap.
Hey, you're doing Fed, you're doing macro, you're doing big tech earnings, you're doing charts. There's a ton top of mind for a week like this, right?
Yeah, it's too much. I mean, it was the Super Bowl of earnings with the 4 Mag 7 stocks, and then that Fed meeting. We knew it wasn't really going to move markets because policy was going to remain unchanged, but those 3 dissents when it came to the easing language, that was the first since 1992.
Yeah.
And then you had the Myron dissent. Everyone saw that coming, you know, but the fact that Jerome Powell wasn't leaving was, a little, what do you call something nicely? A little scoff at the president saying, I'm not going anywhere until these things go away. And I know the Department of Justice, they dropped, the investigation into him, but they handed it off to someone else. And if something comes up, we'll come after you. And
they try to have it both ways.
Yeah, and he's been known to not let these things die. So Jerome Powell, while he's in... he's still in the Fed. He's still there. He's a voting member until 2028.
Which Yellen and Bernanke did not do, right?
No one
they
has
had
done
additional terms when they finished with the chairmanship. They didn't go back to governor.
Of course
Here's
not.
Powell saying, all right, as long as you got the case on me,
Yeah.
I'm not removing my vote from the FOMC.
But he's all about Fed independence, and I think this is paramount. I mean, the president has, he's let his opinion be known. He's come after Fed governors or after Lisa Cook. That's still pending. Jerome Powell went to that trial because he wanted to show support. Now let's see if a new Fed governor, Fed chair, Mr. Warsh, supports Powell if there is an investigation into the renovations that are really not founded accusations, and they've proven that, as it's already been thrown out of court once. So more drama, more soap opera, great Netflix special coming, probably like a 4 to 5 part series Netflix special.
Oh, yeah.
I don't know who will play Jerome Powell, but it will be fascinating. But what's really moving the market are these earnings, and these earnings have got us, our antenna up, and we're focused on it, and I'm focused on the charts. So
is chartist a word? Chartist?
Technician, but you can call me a chartist if you want to.
Well, in that case, you're the best technician. You're the best chartist in the game. So let's hit the charts.
Not even close. I get my skills from people that laid the ground before me, and I just put my little
stand on the shoulders of giants.
I do, and I attribute everything I know to other people.
So you're the giant. I stand on your shoulders. Let's talk the S&P 500 chart. Back at highs here. I think we got it teed up here. Clean breakout. Double top risk. What do you see? I think this is the 52-week chart.
Yeah, this is really tough to see, but I memorized it so I can tell you all about it. I see a series of gaps. I saw what was a really nice topping formation, and it looked like this market was going to puke out. And if you think about what we've endured this year, we started with Venezuela, the SCOTUS resolution, the tariffs are deemed illegal. All right, what is going to happen? We don't know. And then, of course, Iran and the spike of oil. Oil, did you see? It's like $120 a barrel. Paying $4.39 at the pump right now. Yet the market has been shrugging it off. This is a very resilient market. We're focused on earnings and these inflationary concerns that oil will cause a problem. But when you look at the charts, I see a series of gaps that broke the downtrend, broke above key levels of resistance, 69.50, 7,000. And these gaps have not started to fill. We get a little weaker today, which we're in the green again. Maybe we'll start to fill it. But I could see a pullback to 7,000, and that would be probably an area where buyers come into this market because the earnings story is there. The charts are showing nice positive momentum, but you have to find it. And now where is it? The leadership is in some of these magnificent names, the technology stocks. Not all technology stocks, but technology stocks in general, which are the majority of the S&P 500. So you have the right leadership. When we were going down, the breadth of the market, the amount of stocks going up versus down wasn't too bad. We had 6 sectors up, 5 sectors down, 8 sectors up, 3 sectors down. But the sectors that were leading were the wrong leaders. When you have energy leading, that's great, ExxonMobil and Chevron, but it's only 3% of the S&P 500. And that's not going to lift the market on its shoulders. Those aren't the giants. The giants are the generals. Apple reports after today. NVIDIA, that stock was breaking down and faked us out. And from false moves come fast moves in the opposite direction.
Ooh.
JC Peretz.
Dude, from false moves come fat. That's a JC?
That's a JC line. And when you fall for those breakouts, bear traps in this case, you better be nimble and get back on that bus if you're trading it. For those long-term holders of NVIDIA, like my parents, just put it away. Don't look at it. The stock is a juggernaut. I would never sell it.
Let's try and get through as many of these as we can in our last few minutes. How about Meta? The big question, will the company's AI spend finally start driving real returns? We've been seemingly range-bound. What's up with this?
All right, Meta, it's about that 200-day moving average. This is the third quarter, maybe fourth quarter in a row where we've had 10% up, 10% down, 10% up, 10% down. Yeah, so 4 quarters in a row, revolving 10% moves. It was where? When it reported last night? Right on that 675, 677, 200-day moving average, and it failed to break above. That is a barometer of health. It didn't clear it. In fact, now it's going back to levels, this gap where it started its return, 590 to 600. Let's see if it settles in, gets its feet under it, makes a higher low, and then we slowly move back. But their spend was not looked upon as, say, a Google spend. If we can go to Google next, that's a stock that was trading at all-time highs as it came into earnings. So the strength was there, and then it continued that strength. Cloud spend continues to be there. Waymo, no one talks about Waymo, but it's just eating Tesla's lunch and autonomous driving.
Have you been in a Waymo?
I haven't been in anything other than a car I've driven myself.
I have to say, they're awesome.
Yeah, it's, I had a driver this morning at CBC, so I'm lying, but other than a human driver.
Sir.
And an Uber last night. And
got a little,
right.
Let me get that for you. Some dirt on the shoulder. Waymos are awesome. In San Francisco.
But Google,
you watch these hills. But yeah, it's not profitable.
But
obviously.
Alphabet, Google, change your symbol, and I'll call you Alphabet. ABC is available. I say this all the time. But Google breaking out, making new highs, and I think a 420 price target based on the formation it broke out of, nice rounded base bottom, is in the cards over the next 3 months. And then you have Amazon. Amazon, one of the more confusing stocks to chart. We had a nice island reversal there. It broke down, it held, and it broke back up on a gap, and it's now making new highs. So if Amazon, which is kind of trading more today, if that can hold 250, I think we're going to see Amazon continue to do well. It's a core holding of mine, Amazon and Alphabet, that I believe in because I use it every day. And, their Prime is doing well going into sports. AWS continues to hit on all cylinders. So those are the two premieres. And then you have Microsoft. The software story has been a story that has really confused people. AI is disrupting AI, and the software space of technology not doing well. So when we look at technology, you have to put it into 3 components. You have the semiconductors, the NVIDIAs, and the Broadcoms doing well. Then you have the data centers and the memory stocks, the SanDisks, the Seagate Technologies, which jumped on earnings Tuesday. SanDisk after the bell today. This stock is parabolic.
Right.
Yeah, I know. The earnings just keep coming. And Micron Technologies. This is where the picks and shovels and the storage is built, the data centers. This is where you want to be. And then talk about building data centers. Caterpillar had earnings today. And what is it doing? It's looking phenomenal. It's leading the Dow. It's the second biggest holding in the day. Could be number 1. Them and Goldman fighting it out. Price weighted average. So the highest price wins.
Is number 1. Let's take a look here.
Cat was the top dog, as you told me on a different interview.
Oh, Goldman at 921 is higher. Cat's at 888, so not far behind it. But dude, Goldman's up 1.7. Caterpillar on the day's up almost 10%.
And there's your Dow. Those two stocks will carry it. Those are the giants that we talk about when we talk about the Dow. And then you look at other opportunities. We talk about the picks and shovels in the data center space. I look at this stock like Applied Digital, $35 name, up 500% over the last 52 weeks, and still looks like it has room to run. If that breaks 40, watch out. We're going to 55, 60. CoreWeave, it had its ebbs and flows since it's gone public, but it's getting back and basing and breaking out. CRWV, the symbol there. So there are some opportunities within technology, but these beaten down names, these Oracles, the Microsofts, the ServiceNows, the AppLovins, still too many questions. Their earnings have been great. The growth is okay, but AI is disrupting them too much. Watch Palantir on Monday afternoon. They report that's a stock that's been beaten down, and you have the most infamous short seller in the world, Michael Burry, who is still short the stock and saying negative things. And then you have the president of the United States saying Palantir is a great company. He put this on Truth Social.
Yeah,
great Truth Social post. He even put the ticker PLTR in his post. And that is the recent low around 125. So
that marked the low.
Yeah, that is the low. That
It
is
was like when Ron
support.
DeSantis tweeted about the Mag 7. It was the October 29th highs for the Qs. That's a favorite
or
JC Peretzism.
yes, or
like
Tim
as soon
Walz.
as you start to weigh in on Tim Walz and Tesla.
He partied about Tesla's demise, and that was the low in Tesla.
We say church and state. I covered Capitol Hill for years, dude. If we could just keep politics and markets and
watch
separate
Intel
things.
because Trump tweeted about it yesterday, taking a victory lap about the money he made at Intel.
So watch that.
That's usually a sign of a top.
Would you remind me, if you don't mind me asking before we wrap up,
Yeah.
how many years have you been here at the New York Stock Exchange?
Why
for?
do I have to tell you these things?
Okay, well, you've been here for a couple
years.
years.
It'll be 34 years this summer, 1992.
Okay.
Right out of kindergarten.
30.
34,
That's
1992 to we're in 2026. So
Yeah.
do the math. Yeah.
You've been here at the New York Stock Exchange for 34 years. What is one moment, think back to your career as a market maker, and that shaped the way you view markets today? Is there something
shaped
the
moment
that
that
stands
shaped
out
the way
from your early days down here on the floor?
The times have changed. We've continued to evolve. When I started, 5,000 people, open outcry. The biggest and the loudest were heard. And then we pivoted and we went into more decimalization, more algorithmic trading. So the charts are what really got me to learn market behavior and how to trade these things, because I didn't have the big bully in front of me that was buying stock. Oh yeah, I'll buy with you and then I'll sell when you're almost done your order. It was rather easy when you had the humans and the orders on their forehead at times in front of you versus now reacting to market moves. So technicals, risk reward setup, they're my light. My North Star, and they've helped me adapt and survive in a market that's ever changing. But I have a fun fact for you. Do you know what happened across the street on these steps in 1789 on this day?
On this day?
On this very day.
Washington inauguration?
George Washington was sworn in as our first president.
April 3rd. I didn't know it was the date.
Yeah,
of course.
it came up in my Facebook memories as I took a picture of it, so I remembered that.
Well, that's one day.
237 years ago.
And we still have scaffolding.
Is
that the worst?
Hey, Mayor Mandami, it's insane. Where am I going to drink my
I
iced
remember when
coffee on
Doug
a
Burgum
Sunday?
was down here with Trump a couple years ago because he was incoming Interior Secretary. And I was pulled him aside and be like, listen, there's one thing the community down here really wants. Please take the scaffolding down off of Federal Hall.
Yeah, Federal Hall across the street from the New York Stock Exchange. If you've never been, that was the first White House. That's where George Washington was sworn in to be our first president 237 years ago today. It's where I like to drink my iced coffee on a nice sunny summer day. And, it was the equivalent when I was growing up and going out drinking all the time when I started down here of the Rocky Steps in Philadelphia.
Oh, wow.
When the Spectrum was available, we would always meet our friends at the Rocky Steps. We didn't have cell phones. I'm very old. And then before we went out in my early days of Wall Street, meet in front of George and we'll go hang out. Well, George is under wraps, unfortunately.
He is. And my father, and my father passed away a few years ago. My stepfather, he used to work down here on Wall Street, not too far away. He used to eat his lunch on those steps every single day, and he would tell me the stories.
Yeah.
And since being back here, all I want to do is just eat my lunch on those steps, Federal Hall. Let's make it happen.
Yep.
You've been super generous with your time. Where can people go to see more of your stuff, Jay Woods?
They can follow me on Twitter, JWoods3 at JAYWoods3. They can get my weekly newsletter. Go to my LinkedIn, JWoods, CMT. There's an easy way to subscribe there. And, you can follow me on NYSE TV Live. I'm usually on there once a week with you, my friend. And CNBC Pro, you can read me every Thursday and see me every Monday behind the paywall on CNBC Pro.
Yo, that is because I now get behind the paywall on CNBC Pro. Yeah. What a flex when they're like NYSE Insider Jay would say, you are the headline, dude. No, don't do that face, dude. It's you in downtown. And they're like, hey, these two figures. We're going to frame our entire headline around, and rightfully so.
Yeah, downtown's a good friend of mine. He should be coming down any second now.
There we go.
Say hi to him.
That's going to do. Thank you for being here, my man. It's nice to see you.
Thank you. Congratulations on the show.
Thank you,
for those that have been watching now, like that button and hit subscribe. I always want to say this, hit, punch. What do we do?
Smash the like button.
Smash the like button and subscribe to get more. And instant. Well, I got to see a pop-up. Watch you, and then it said watch me, and they realized, oh crap, I better run down, I'm on the show. But it's great content, and your guests have been phenomenal.
Incredible
to be
guests.
one, I'm very honored, so thank you very much.
I'm so lucky. And that's going to do it for today's edition of the show. We will be back next Thursday, May 7th. May 7th already? Damn.
Yeah,
wow.
that
happened. I wrote it down. It didn't look right. May 7th, 10:30 a.m. live from the big board. Special shout out to Taylor, Dan, the whole crew up on 12. Tune into the Big Skinny with the one and only Lou Bassanese today at 5 p.m. from Launch Live Now. New York Knicks, Game 6 tonight. They got this one.
Sixers Celtics Game 6.
Sixers Celtics. And your Flyers last night in OT.
That was
Putting
scary.
out Sid the Kid in
Another
the
reason
Pens.
I didn't sleep. Yeah.
What a pop in that crowd. Congratulations there.
Nice.
And today at 4 o'clock, you're stuck with me once again for the closing bell, a whole new edition of Taking Stock live from the floor. I'll see you then. Well done, bud.
All right. Thanks,
you,
man.
dude.
Always fun, yeah.
Awesome.
Hey, George Washington.